to all our participants. Do take this opportunity to ask questions to our speakers if you do have any. And our next topic, the ASEAN investor, where are the next opportunities? To discuss further on this topic, I would like to hand this session over to Datin and Moris, Chief Executive Officer, Maybank Group. Datin, over to you.
Good morning, everybody, and thank you for your responses to that poll. I think perhaps we will share the responses at the end of the session just to make sure we know, where our investors are at. So good morning again. And so what should be the conversations when you have the heads of 4 of ASEAN's largest exchanges on the same panel? To me, it should naturally be hot. It should naturally be topical and around possibly new investors, new finance, and new consciousness. Well, at least that will be the focus of today's panel. And we are honored today to have on our panel Datuk Umar Swift, CEO of Bursa Malaysia, Datuk Dr. Pakorn Peetathawatchai, President, the Stock Exchange of Thailand, Ramon Monzon, President and Chief Executive Officer of the Philippine Stock Exchange, and of course, Michael Sin, Senior Managing Director and Head of Equities, Singapore Exchange. Before we go into the conversation, ladies and gentlemen, let me set the context with a few facts. Firstly, the MSCI ASEAN Index has been underperforming key MSCI global equity benchmarks, both for emerging markets and all countries. Secondly, institutional fund flows for both active and passive funds have, for the most part, turned to net outflow positions. And thirdly, ASEAN local investors themselves are increasingly looking beyond our perceived all economy exchanges for areas of investment opportunity that are more in sync with their principles, as paths are now being made more accessible. But there are also positives, such as our NKE economists projecting buoyant economic growth over the next 2 years, and ASEAN standing a fair chance of tapping into surging global sustainability AUMs to the likes of $53 trillion expected to be invested in ESG growth opportunities. Ladies and gentlemen, today's format with our 4 gentlemen is an open conversation, and panelists are encouraged to jump in wherever and whenever. So let's start. The first question I would like to pose to the group. Looking at the new ASEAN social investor, all exchanges have seen a growth in retail trading over the last 12 months. So what plans do the exchanges have to continue to tap into the retail liquidity pools as the underlying current drivers of whether it's low interest rate global environment and simply being under lockdown and staying at home fade or reverse? So maybe I'll kick that question first to Datuk Umar. Datuk Umar?
Thanks, Amy, and a very good morning still to everyone. I think the key thing is what are investors looking for? They're looking for growth and dividend. They're also looking for ease of experience. So from and my colleagues from other exchanges will also be doing the same, I'm sure. It's all about removing barriers for opening accounts, making sure they're delighted. There is a greater emphasis on education because we have new investors. I mean, we grew, retail accounts grew by some 132% year on year new account openings, of which 80% was retail last year. Tremendous, a large portion that was millennials. Now they've been attracted in because of liquidity. Some have said, Tina, there is no alternative, and they then have entered into our market and they've enjoyed returns. Now we're moving into a different period, and is this growth sustainable? And I think all of us at ASEAN exchanges are looking to delight these investors and bring new interesting products to ensure and reach out to them in the mediums that they use, be it Facebook, etc., IG, and social media. So setting the context.
With that context prevailing in Malaysia, in Bursa, for Ramon, that was a similar experience in the Philippines as well. Retail participation in the Philippines rose to 44% in first quarter from a very small 18% in 2019. So what will the PSE likely be doing to ensure that is sustained?
Well, again, the impressive growth in the participation of the retail investor in the Philippine market is even more significant in the sense that our average trading volume has also gone up. So not only, okay, our average trading volume has gone up 54% in the first quarter from, the previous year. So with that growth, the local investor participation, also went up to 74% from 55. And of the 74%, the retail market went up from 26.9 to 43.3. So, it's just not a growth in the retail investor per se, but in the overall, participation of the market. So for us, it's very important that, investor education continue to be, in place and, get the retail investors, especially the new investors, educated on, investing for the long term, not going for the so-called speculative stocks where they hope to make fast money, and eventually they will get burned, lose money, and then get disincentivized to continue participating in the market. So for the PSE, we're really boosting our investor education initiatives to make sure that the retail investors are adequately protected from getting into speculative investments.
Okay, we take note of that, Ramon, and maybe that's a good segue for Michael, right? Because whether we like it or not, investor preference for new economy stocks, whether the tech, the renewables, the pharma, they are fairly distinct from the older economy stocks that are prevalent in our exchanges, the telcos, the banking, and the plantation companies. So what are the remedies that Singapore Exchange are looking at?
I think the exchange as a standalone infrastructure isn't going to change the economy, but there's lots of very important things that we can do, right? As alluded to by Datuk Umar and by Ramon, the tension we have as regulators and infrastructure providers is wealth management or gamification. Somewhere in the middle is probably that sweet spot. So with respect to growth prospects, where in a zero interest rate environment, you've got inflation running wild, people know they have to do wealth management, but what they really also want to have is double-digit, triple-digit returns. So how do you do that? Well, one of the most important parts of the regional economy that we have to think about in development is the new economy. And this is already happening. We're seeing this, right? So today, you alluded to the MSCI construction for Asia. In Asia ex-Japan, China is 50%. Korea is 15, Taiwan is 15, India is 11. All of the rest of us put together, below 8%. This is starting to increase because the new economy stocks, names like Grab, like Sea, like Gojek, which is coming, Toko, which is coming, these have all been included, and they're now included in MSCI ASEAN. In fact, so the ASEAN weight is going up by 1% because they're getting included. And what will happen next is very much as you've seen in Hong Kong, the homecoming of these stocks, because this is a natural home of those companies. So I think our economies have done a very good job of providing a growth story that's regional for these new economy stocks. And in the very near future, I expect that we'll see them returning to our markets.
Okay, and the one big question also that people tend to ask, right, is how do exchanges at least try to retain unicorn investability within ASEAN? So maybe Dr. Pakorn, any thoughts on that?
Yeah, let me get back to the first two questions, because I think it's very important that we look at all the market and we see the similarities between this market. The first thing that all of us mentioned is that the ease of access to the capital market, that is so important. That's why the e-open account, e-KYC, e-suitability, and then the online trading platform are so important. That's the first thing. The second thing that I would like to mention is that the new IPO. When you look at the new IPO in all the market, you will start to find that these are the new large stock that the company want to divesting or start to split it up into many industry, and that concentrate more on the retail investor. This is why now the digital platform that each exchange has must be able to maintain the service to provide to all these new number of the investor. And lastly, like Michael just mentioned, when you look at the economy, our region has been affected a lot by the COVID pandemic because we are logistic, we are tourist destination, we are like hospitality business. However, this is the part that certainly we need to look into that. even for the new normal, this economy, this industry would be able to recover very quickly after the pandemic if the vaccination is complete. Looking at like hospitality, the wellness, the healthcare, the logistics, these are the industry that in our area are very strong. That's why before I getting into the how can we maintain the unicorn, we need to look at our bread and butter. How can we get it back? And now when you look at how can we start to groom up all these unicorn or the startup, I would say there are at least three things that we need to support them. The first thing is the education and platform, because startup normally for themselves, they have good idea, but they need to understand the entrepreneurship. They need to understand how to run the business. That's why we need to bring up this kind of like support for them. Secondly, to scale up, how can we provide the back office support? How can we have the system that they can use in the low cost and use those information to connect to the investor and to be like the connecting point to the issuer and the investor. And lastly, the funding and the trading platform. This is the part that we need to provide more channel for the startup to be able to raise the fund. Previously, normally what they did is to looking at their family, borrow from the bank, but how can they utilize the capital market to fund themselves? These are the things that I would say we need to build up the ecosystem, not just the way that we work with them, but we have to provide all these functions, the platform, so that the startup can get these kind of accesses.
Okay, so if I hear everybody correctly, there's a whole myriad of things, you know, in order to retain the retail liquidity pools, lots and lots of education, you know, to really focus in on the bread and butter recovery stories, of which, you know, all the ASEAN exchanges are definitely going to be experiencing in a very positive manner. And of course, and most importantly, the removal of friction, right? And the cost of transactions. So if we talk about removal of friction, perhaps this is also a kind of timely segue into talking about, for example, new finance, right? And as we all know, how the ASEAN exchanges will thrive or adapt does depend, or perhaps, you know, will have a point of reflection on the blockchain trending future, right? And what we call the new architecture of trust. Today, we all sell the brand of the exchanges as the trust platform, but with blockchain as a technology rather than an institution, right? It is gaining financial market traction, especially in enabling the tradability of many assets via security token offerings. So, segue, you know, if we were to take the bread and butter recovery story and also put together the whole new growth opportunities under new finance, for example, where do the exchanges see the road ahead? So perhaps I could start with you, Dr. Pakorn.
I would say that as a role of the exchange, I think we have a strength in that the transparency and the liquidity of our traditional market, which in my opinion can be the linking point to the new digital asset exchange. At the moment, when you look at the blockchain and the digital asset, the thing that we need to consider very seriously is that how can we rely on this new technology in a case that some conflict or some issue coming up, how can we solve all those kind of things? That's why, in my opinion, the evolution of this transition would become like, how can the traditional and the digital asset grow together and link it? And at one day, when we find which market is more efficient, people will turn to that market. But at the moment, there are still a lot of things that we need to concern. That's why, in my opinion, it will grow together, and if you have a linkage between the two exchange, the two type of exchange. For example, now once you have like investing in the cryptocurrency, what would you do with the profit that you get from there? Would you put it in and undiversify in one asset? Now, if we can have a linkage between the two markets, now you can move the digital profit into the traditional market and vice versa. If you have like, you want to diversify from the traditional asset market, how would you invest in the digital asset? I think this is the area that we would see. And I would think that the concept of digital asset that is very powerful is that it's so easy to access. And also it's 24 hours. And also you can invest in it in any amount. This is the issue that the traditional exchange, the traditional asset market need to be able to get back as a solution for those kind of things.
I think building on what Dr. Pakorn is sharing, there are two elements. As a traditional exchange, we have investors. Investors want great products. As we've seen, as my colleagues know, we've all struggled to develop an ecosystem in Love One, although I'm sure there are people cringing as I say that. But the reality is, you need investors to get great product or vice versa. And what we see with the digital space, there are two elements. One is product, ease of use. The other is for the exchanges. Is this technology ready for us yet? Is it robust enough? We've seen two different approaches. We see the approach in Australia, which was a traditional cash equities moves to DLT. And then in Switzerland, they've just created a whole new exchange with SIX. Our thinking at this point in time is we've done a number of different POCs rather than taking interest in assets, but we'll also be looking at that, is to really try the technology and look at how it can make the experience better for our investors. So we're not talking about real-time atomic settlement, et cetera, just at this point in time. But how do you make it easy to bring assets to market and bring, in my mind, and echoing Dr. Pakorn, we're going to see verticals. We're going to see your cash and equities. You'll probably see a debt cash piece. Then you'll be moving into tokenized assets. Whether there's a wallet sitting on top of the tokenized assets that allow you to pay for things in crypto, well, that's up to each country will have its own approach as to its regulatory framework, recognized, not recognized, etc. It's actually very exciting. I'd love to see, basically one matching engine across all my different platforms, and then one depository across all my different platforms. And we believe that distributed ledger has that ability. So it's not about, trust being institutionalized, moving away from the CCP, but how do we use it to actually make the experience richer? Could there come a time when the four gentlemen on this call have the same depository residing in the cloud and driving down the cost of business? I believe it is there. It will happen. And we should work towards that goal. But as all things, baby steps. POC, proof of concept,
Well, that would be tremendous. That would be really tremendous if, it, in a way, it's a reconceptualization of the ASEAN trading link, in a whole form and also platform. Michael, maybe, any response from your side on what Singapore Exchange is undertaking, because there have been announcements in response to some of the suggestions that Datuk Umar has just made.
I think both Datuk Umar and Dr. Pakorn have completely covered the waterfront in terms of the issues and the opportunities. So maybe I'll share some of the other part of the thinking, which is that as these alternative assets reach more people, the one thing we know and have learned from COVID is national borders actually matter more than ever. We think we're globalized, actually national borders matter. And this means that politics and regulation matter in the two most important aspects, taxation and currency control. Those aren't going away. So therefore, if you want to believe that you can build a B2C business that reaches everyone in the world, it's not happening in my lifetime, at least, not when it's for real assets. What will need to happen is you need national infrastructures in each jurisdiction to work in a decentralized way and possibly in future a distributed way. So our starting point here has been to experiment actually with assets where it's mainly accredited investors, so we can start experimenting on the use case. So we've gone on a wide range of things, right? We've worked, we have investments in a company that does private equity things, SpaceX. rockets. Someone was tokenizing whiskey. We've got one coming up, which is trying to get carbon credits into a token. We're even working with a bank, DBS, because they have a lot of private banking clients. They have banking licenses, and they are doing crypto and they're doing bond tokens. So a lot of the learnings from this is actually for me to get my regulator comfortable that all the processes, all the regulations to do with tax, probate, enforcement, surveillance, rollbacks, they get comfortable that tokens actually work before we start attributing them to things like securities. Because securities are not as simple as buying Bitcoin. When you're a shareholder of a company, you have rights, but you also have responsibilities. So in our example, let's say Singapore Airlines needed to raise 10 billion. You have to reach out to your shareholders and say, I want to talk to you, explain to you why you need to take this rights issue. Do you want to take a convertible right on this convertible bond? That's not something that you can do in a B2C piece of cloud software. The exchange and the issuer has to get in the middle to say to a shareholder, you also have responsibility to the company that you're invested in. So that's why ownership and equity in companies and operating institutions come with much more obligation. And it takes baby steps to get there. It's not as simple as buying barrels of whiskey on a token.
And I think building on what Michael's sharing, I think that's the key thing. Transparent markets, you want to see markets run in a fair and orderly manner. We want them to be vibrant. But when you have cryptos are homogeneous. Throughout the world, the price is known. When we look at listed and equities, it's not quite the nature of those assets that will be tokenized are somewhat different. And shareholder rights need to be entrenched, et cetera. We will want to run with differentiated asset classes. We will want a fair and orderly market, so market surveillance comes in. And so again, echoing what Michael was saying, it will be a step-by-step process. But I think everyone on this call will be putting their toes in the water, so to speak, looking at how this technology can delight the investor and drive down costs, of course.
Yeah. So Ramon, maybe because you started off with education being pivotal, right? Especially for this segment.
For the Philippine market, I just want to make some comments on this crypto, trading, in the stock exchanges. For the Philippines, cryptocurrency trading is really it's in an infancy stage. In fact, as we speak now, we are still waiting, some rules from our regulator on how to, regulate digital asset exchanges. So I feel, I don't deny that, cryptocurrency complements, traditional securities in a trading platform. But again, because it's a new product, so investor protection being an important part of an exchange's obligation, we need to wait, of course, for our regulators to come up with rules to protect investors. And again, more important, even if the rules are there, we've got to engage in massive education for investors on this new security class. So for the Philippine market, I don't see this happening probably in the next, in the short term.
Yeah, and also taking up from what the various responses, the obvious question from various segments would be, why would exchanges take on the risk of custody and settlement, as well as the security and reputational complications, for example, right? And as we all know, there has been a lot of fraud and speculation around the trading of Bitcoin, for example. So yes, baby steps, but how would we manage that perception that it is not just speculation?
And there's complete silence from the learned members.
Yeah, just pick up, Amy, just pick on someone. We've clearly got a lot to say, but I don't know how much we can actually.
All right, let me grab this thorny one. I mean, from our perspective, would we be building a crypto exchange? We've looked at it. It's not perhaps where we are. Now, would the asset be available maybe as an ETF or as a depository note? But would I have Would I have a crypto sort of exchange running? No, I'm very interested in tokenized assets. That has a role to play. But, you know, heaven forbid, we view, is there an underlying, I mean, this is more my value judgment, to be frank, is cryptos don't have any underlying substance. It's a supply-demand piece, and you can see the price fluctuate widely. It doesn't mean that it doesn't have a role to play before I get inundated in the question box. But our role is trusted counterparty. That's what we do, which is why we then do the depository, etc., to control the whole, not control the transaction as well as the value chain. But crypto per se, Dogecoin, Ethereum, Bitcoin, I think it doesn't quite jive with what we're trying to do, because as the exchange, we help people raise capital to invest in their businesses, and to create jobs, create profit, pay tax. So that's one element of it. And from an investor perspective, it is about growth and dividend. Cryptos don't achieve that, but a tokenized asset can. So it's a slightly, it's nuanced naming. It's not just crypto bad. It has a role to play, but not perhaps for Bursa.
Maybe just to jump on Datuk Umar's point on that, which is there is legitimacy in the idea of a crypto asset. You know, I have a nephew who trades in sneakers, and to me, a sneaker is something you buy for $9.99. But you all know that sneakers can go from $5,000 to $10,000. God knows why. It's a pair of shoes. So there is legitimacy in people saying, I want to sell this pair of sneakers for $5,000 to $10,000. But very clearly, as Datuk Umar is saying, the people who are involved in crypto today make money purely from capital gains. Nobody has yet worked out a social purpose for the things that go on in crypto. That will happen. That will surely happen. Crypto version 2, crypto version 3. The way stock exchanges in particularly are formed is that we have a very specific social purpose to serve in terms of issuers, international brokers, education, research, and increasingly ESG, which I'm sure you come on to, where the stock exchange's role is now incredibly intrusive. We're supposed to tell our listcos, hey, listen, you need to talk about carbon, sulfur, water usage. So crypto is still in a very early stage of growing up to say, what is my social purpose in society? Or am I just a sneaker net?
If I may add, I would say that the things that the exchanges, I would say that all of the exchanges are talking about would be the function of the digital asset, the token issuer, the trading and clearing, the wallet issuer, and investor services. Those are the things that are the function of the exchanges. And we certainly would be more welcome to use the technology of the digital asset market. And on the cryptocurrency, I would say that the main function of the cryptocurrency that the exchange would employ would be on the mean of exchange, which is not just the property of the cryptocurrency, but all the digital currency. That's why I think that for the Stock Exchange of Thailand, the thing that we would be interested to do is that how can we transform all these traditional market function in using the new technology that underline the crypto market at the moment, if we found that it's more efficient and it has serving the customer to their purpose. And that's why I think that for us, it's more on the using the digital currency as a mean of the exchange, not as an asset that we gonna do the trading. But I also agree with the Datuk Umar on the fact that the product of the cryptocurrency could be interesting. For example, like the ETF or the structure note or something that we would be able to control and maintain the investor protection. Those are the things that we look into.
So if I hear you correctly, Dr. Pakorn, then the Stock Exchange of Thailand is conceptualizing is almost a parallel ecosystem to the current exchange that you have?
Yes, I think that we never know which model gonna be successful in the future. So we look into both the traditional model and the digital model. However, we certainly need to improve and increase the efficiency of the traditional model, the asset that we have, so that it become more like a cross-market, cross-product exchanges that can be worked parallel to the digital asset market in the future.
So Ramon, I hear you when you said that, you know, firstly, all these discussions are at infancy, and certainly at infancy within the conversations of ASEAN exchanges. But what would the PSC, you know, what would the view of the PSC be in terms of the options into the future?
Well, we are working together with our regulator now, so they could formulate, you know, the rules, okay, that would, you know, take investor consideration as a primary, you know, consideration. And at the same time, we know whether the exchange trades cryptocurrencies or not. There are investors already trading that, you know, in other, websites or platforms. So the thing, and we don't know how safe those, you know, trading those platforms are. So that's what we've been telling our regulator. While we know, you know, this is not ripe for the Philippine market at this time, but we do have to, you know, I guess, put some urgency in it, because at some point in time, we need to, you know, get those present investors in digital currencies in the, you know, in a setting where, you know, the platform is safe. I mean, speculation is well understood and I guess controlled. So we are working to, you know, get this on, you know, on stream. But like I said, probably not in the next 6 months to a year. But we recognize it, you know, it is part of the, you know, I mean, exchange's responsibility to get this into our platform.
Yes, so my plan was actually then to move to the third part, which is on new consciousness, all about, you know, the most talked about conversation, which is on ESG. But maybe the last question that I have, you know, in terms of new finance is ESG tokens, right? Carbon tokens, would that be things that, you know, the exchanges would, you know, could feasibly be looking at?
That's yours, Michael.
When you look, yeah.
You know, we are. It's actually, honestly, it's a way to drive interest. I think ESG is a very complex, and I don't think ESG as a concept will sustain. Something will replace it, right? The overarching thing is this idea of sustainability. Now, historically, all of our exchanges have only focused on G. We know G adds value, right? Governance is very important. E is now very topical. We know that's true. But sustainability is deep in our DNA, because what we talked about earlier, not allowing or not permitting people to blow their money because they think they can make 10x on a stock, but rather create wealth sustainably. That is the fundamental mission why we put so much engineering to our stock exchanges. So while it may seem new, actually it's just an expansion of the role that we're saying that we need investors to get even more educated about companies than just their governance, just their dividends. We're saying that if you want your investee company to be sustainable for the next 10, 20 years, the environment is going to start becoming important. And that can happen in tokenized form, in depository receipt form, in ETF form, in many, many forms.
I mean, it isn't, I mean, this whole concept of ESG, it's actually been around for a long time, but particularly the S. I mean, you can go back as far as Vietnam War. Dow Jones was being sold because it made napalm. There were demonstrations. So this, but of course, it's become more mainstream. But we get back to our raison d'être for what we do and who we are is to create long-term wealth and allow people as a part of the as a part of our respective economies, allow people to raise capital, and so there is a social impact to what we do. Clearly, the G, as we all know, does move the needle a lot, which is where our primary focus was. But we need to start caring for our environment, because if we continue to warm our nation, or warm our world rather, we won't have much of a world left to for our children to inherit.
Yeah, but the question, gentlemen, is, are we moving fast enough? Are we evolving our regulatory enough? And also to ensure the corporates also got skin in the game.
I think
Okay,
the key, go, yours, Doctor.
Sorry, Umar. I think the point that you are making is very important. However, what we need to do is that how can get this information to the investor. That's why I would say that we certainly support the way that the standard of this information on the sustainability will be setting, and then we need to build up the capacity of the people, not in the both listed company and the investor side, to analyze this information. And also, as an exchange, I would say that it's our job to do the data management so that the listed company know which data is meaningful for them and suitable for them, so that they can have this information transmitted to the investor. These are the things that, in my opinion, are very important to build up this sustainability.
If I could add, I completely agree with Dr. Pakorn, which is why I think all the exchanges have focused quite narrowly right now on carbon. It's not the be all and end all, but it's important because it's something where there's enough understanding where you could persuade your listed companies to do good comparable disclosure. So the idea of the market is to say, with the right disclosure, our marketplace will price in either a green premium or brown discount, and the market will tell the company, do more of this, do less of that. So it's like accounting standards 30 years ago. It took 20 years to get IFRS agreed across country. It will take another 10 years to get carbon accounting working. And then we still have a lot of work to do, but that's a starting point.
Yes, I think that there is general consensus that it's all about disclosures, and disclosures that need to be standardized, they need to be frequent, and of course, they need to be very comprehensive. So, again, taking it to a slightly of a more interesting topic, engine number one, right? The small activist organization that created a lot of headlines all over the world by being able to put on the board of ExxonMobil 2 of its representatives. So stakeholder activism in this part of the region, do you as exchange CEOs, are you anticipating that we will see a lot more of it? And what is the message that you are sharing with the boards and management of listed companies, for example?
So maybe I'll start. I think the answer is yes and no, because at least on our exchange, we don't have a company that's so prominent and salient in this discussion. So yes, in the sense that we're seeing a lot of scrutiny from retail shareholders about companies. When they come and do rights issues, they're on a virtual AGM now. Anyone can dial in and put up their questions. Why are you doing this? Why are you spending money? So I think accountability is very high because of digitalization. But in some sense, no. Because it's due, again, back to the earlier point, it's the weighting of our economies and our companies within global indices, right? A lot of the investment now happens through the passive shareholding arms of, say, BlackRock or Vanguard. And if our weightage is about 10% only in Asia ex-Japan, I think what they'll do is focus on impact. So I think our companies have time. The challenge that we have, but it's not been the hardest challenge, is to actually speak to the listed companies in the middle and SME tier to say, this is coming, it's very important for you to engage. So we're leaning in a lot. We're actually offering resources on automated sustainability reporting or of doing analysis against peer groups. The big companies get it, especially our property companies. Right? But the smaller companies, they're all going through their business challenges. It takes a lot of trust and persuasion to say to them, this is going to be very important for you. So 2 words we used because they're Singaporeans, right? One is we're giving you a power assist. It's like having a car with power assistance. Secondly, we're teaching you to be exam smart. But you will have to take the exam. We're just helping you to be exam smart.
I would say that, please, Umar, sorry.
I think Michael's hit the nail on the head. I mean, basically, the call to action. So let's look at our exchange, 900 plus companies, of which we have 76 in FTSE for Good. So there is actually a tremendous room for improvement. And I think we all have a similar experience. So it's an education process. Sustainability is not a cost. But, ASEAN are trading nations. If we do not, we produce product, intermediate product for finished goods. As our customers decide, I mean, it's a real opportunity, and that's what we've been communicating. Make yourselves have a path to sustainability so you can get new customers, new people purchasing your products, build your business, be an early adopter, rather than being a loser and having your product no longer taken because your MNC that is buying your intermediate product has decided you're not green. And for them, is it a homogeneous product? Is it unique? And they just move away.
Dr.
If I may add, right. I think Michael and Umar mentioned about on the listed company side. I would say that on the other side, how can the exchange support the listed company and investors so that they can have an interaction with each other more using the technology? All of us know after the COVID, the AGM meeting is very difficult to arrange. That's why for us at the exchange, we provide the e-AGM meeting services that the exchange provide to the listed company so that they can have the meeting using the Zoom, WebEx, or like MSP that we are doing like right now. And also the service that we also provide is the e-proxy and e-voting. These are the things that in my opinion would give like the investor more access to show the decision or show their interest into the company more using the technology. So we need to provide both knowledge, provide the pushing for the listed company to be more interactive, and also we need to provide the ease of access for the company to provide to the investor so that they can be interacting.
I think all four of us are agreed that the first step really in this ESG thing is, more comprehensive corporate disclosures on their sustainability practices or
Right.
ESG. I mean, we're all agreed on that. I mean, and also, I mean, I think the listed companies can see that on the fixed income side, investments in, green bonds have been happening in the last 3-4 years. But, on the equity side, that has not happened. So again, we started the disclosure, framework. Everybody has some, I guess, uniform disclosures that will allow investors to see where each company is, at their ESG compliance level. And then really, I think in the Philippine stock exchange side, we're really looking at creating an ESG index. But, it's just not as easy as doing that. You need to craft, some rules or some, you might say, eligibility or qualification. Why, how companies would get into the index. And then I think that would start attracting, in equity investments in these companies through that ESG index. So that's where we're working towards as far as the Philippine Stock Exchange is concerned.
Let me just take one question from the audience. The question is, will we see sustainability as a hard prerequisite in the ASEAN exchanges, and what form would this take?
I think it is inevitable that some parts of it will, starting with carbon and climate disclosure. So we're chairing or co-chairing this thing called TCFD, which is just an attempt to say to everyone, can we standardize what the companies need to do so that we give, so for us, it's our regulator internal and the MAS, the ability to nudge companies to say, look, you're ready now. It's going to be mandatory. right? So you have to nudge them slowly in place, because for a company to do carbon reporting, like even for us, we've just finished our exercise. It's actually a lot to learn. You know, I got to figure
Sure.
out how my coffee beans, what's the carbon footprint?
Mm.
Data center, what's the carbon footprint? It's a capability that takes time to develop, and
Mm.
no CEO is going to invest in this unless he's told by his stock
Yep.
exchange, look, man,
Right.
there's regulations coming. You need to
Yeah.
disclose this in your report. So
Mm.
that's the starting point. The regulator has to get
Mhm.
involved, and that way it's fair and flat,
Mm.
yes, and comparable across
At the moment,
jurisdictions.
right. At the moment in Thailand, we're working with the SEC and we come out with the sustainability report regulation. It's called the one report. This is gonna be required after the next year that all the company need to disclose the sustainability policy, strategy, and performance throughout their corporate value chain. I think that's the starting point. And the thing that we are trying to do is that how can we make it the least painless for the listed company? Because all these things, like Michael mentioned, there is no such like standard. So we need to come up with a template. We need to come up with a workshop, and it got to be industry specific. It cannot be one size fit all. Those are the things that we need to start to do, like the learning curve. Yeah.
On the side of the Philippines, I mean, our regulator has imposed what they call the sustainability reporting requirements or framework. Okay, so this started in 2019, but for the first 3 years, starting at the reporting year 2020, 21, 22, it will be on a comply or explain, because like I said, a lot of the listed companies are not ready to do, to disclose, some important, I guess, environmental guidelines like carbon footprint and all that. So for the first 3 years, the listed companies can go on a comply or explain. If they are not able to do it, they explain. But come 2023, it becomes a regulation. It becomes a required disclosure in the listed company's annual report.
Okay, one question actually. So sorry. Okay. It is reported that Bitcoin alone consumes as much electricity as a medium-sized European country. Safe to say that in general, once scaled, will be dirty currency. So what are your views on this? How will the exchanges reconcile with your own ESG agenda?
So it's a specific reason why actually we haven't done Bitcoin in its current form. So my views on this are that Bitcoin is a fantastic and wonderful proof of concept. Came after the financial crisis. It tried to establish trustlessness through proof of work, and we now know that you can't scale proof of work because you're substituting trust that you already have for the energy consumption of a country. That's not a legitimate trade-off anymore. There are other ways to build trust or trustlessness into second version, third version of these crypto assets, which are on a public chain. And I think that we'll look back at Bitcoin and in 10 years' time and say, what was all the fuss about? Just like we went from 2G to 3G to 4G, now we're on 5G internet. It will evolve. And one of the things that I think people will hold a global network accountable for is that it can't be entirely faceless. There must be recourse. There must be ultimately some ability to enforce. I think that's when it truly scales.
Thank you, Michael.
Any specific response that any other gentleman would like to take? Because those are pretty.
I think Michael come up with a very good solution and answer for the question that you have. Yeah. Totally agree.
Michael pretty much hit the nail on the head with the hammer. I mean, it gets back to the philosophy of what exchanges are about, efficiency, etc. The DLT platform that is Bitcoin is very interesting. It's not particularly efficient. And we need to move to something that's going to evolve. And I think it'll be step by step. I mean, I've used the term a number of times, but really, say, for example, at Bursa, we're having a POC around a parallel tokenized asset. I think the RFP goes out the next couple of weeks, just because we want to test the technology and understand it. And I mean, a little bit, we test it to failure.
Okay, interesting. Datuk Umar, a specific question also to take up on your comment about leveraging technology to drive greater opportunities for partnerships, such as a common depository across the ASEAN exchanges. Any other further comments on that?
Well, I'd also like, well, I mean, we are an intermediated environment. I think so. The front end may be always quite specific. We have different vendors, so that's all about branding, if you like, and what we're doing, and we all have our own aspirations. But as you look at the back end is amongst ourselves. Of course, there are issues with regulators to look at, but it could be a common solution. We're all very hungry for foreign institution support, foreign investors. The best way to attract foreign investors is to make it easy for them to invest, and perhaps clearing could be something that we could share, build common platforms as we go forward over time. I mean, then a depository is probably a little bit more difficult, but that would be around a DLT solution in my mind. And I think that's quite exciting because it drives down the cost. I mean, as an exchange, one of the things I'm very mindful of, we want to deliver value and drive down cost. So is there a moral hazard cross-subsidizing development in DLT at the expense of what I should be doing for cash for equities? But we look at it and we scale our investment to test the technology, always with a view to supporting our cash to equities and what we hope, what we want to do in derivatives as well.
Okay, we have a lot of questions in the chat box. So if any of you gentlemen want to answer any particular question, please feel free also. But perhaps one question, as we are moving towards our wrap up, an interesting question perhaps. The competition is global now. What would be ASEAN markets' point of difference?
Well, for me, the biggest point of difference is that ASEAN is distinct from China and the US, right? It is sustainably positioned demographically because we still have a beautiful demographic stack. We are critical in world trade, and we are between the great land masses of India and China. So economically, it's a highly sustainable construct. We've proven ourselves as ASEAN to be able to be politically resilient, even though it's not even a federation, right? It's a brotherhood and sisterhood of nations. And that is a very sustainable model for capital markets to integrate the financial supply chain. We've spent the past 20, 30, 40 years integrating all sorts of supply chains, and now it's time for capital markets to come to the fore. A lot of it historically was due to regulation, or even the fact that we ran our own trading pits, which are physical, data centers, which are physical. But as both Dr. Pakorn and Dr. Umar, Datuk Umar and Ramon have alluded to, the next generation actually is about software-defined exchanges. Like all of our stuff in future won't be physical. It'll be software-defined. And once it's software-defined, it becomes less politically sensitive because it sits there, it's shared, right? It can sit in a cloud, it can replicate. I think when that happens, our financial supply chains will be much better integrated, and therefore ASEAN will become investable as a region, a meaningful demographic region.
It's about getting size and scale, I mean, to a large extent. I mean, we see the opportunity in the size and the population of ASEAN, but it is not a homogeneous market. So the greater homogeneity, I mean, our rules will come together, it will be an evolution, and that's the call to action. That being said, as Michael nicely put it, we're not quite the breadbasket, but we are a large manufacturer. We are trading nations that manufacture. We provide support. We provide soft skills. I mean, these are not unique, but we are well positioned to serve the world in products they need.
Agreed, Dr.
And when you look at all countries in the region, we have strengths that are quite different and diversified. I think that is one of the very important factor, that it's not just like one country. It's more like many countries, but different strengths that they have. And when you look at how they integrate, at the moment, when you look at the trade integration, it has been great. You can see that now the cross-border trading between Thailand, Malaysia, Vietnam, and other countries that connected to each other are more and more. And I would say that for the capital market, we are quite lag behind the trade market. How can we promote this kind of development? I would say that you're going to start to see it. The cross-listing of the product. For example, in Thailand, we have the listing of the Vietnam ETF, which is very popular here. And almost 30% of the trading value of that ETF in Vietnam nowadays come from Thailand. The thing is that how can we start more and more cross-listing of the asset within the region first, so that now the market become connected, and then we can sell the whole region as an asset class to the outside of the region. I think those are the evolution that we're gonna start to see.
Yes, that would be really awesome. Ramon?
Well, I mean, at the moment, the world can see there are no more trade barriers, you know, among Asian nations, ASEAN nations. So, as Michael said, you know, our demographics for the ASEAN countries are fantastic. We've got the, you know, one of the youngest population, I guess, profile, you know, in the world.
Mm-hmm.
We have, so, you know, the consumption, you know, the number of consumers, you know, I mean, is there. And then combine that with the, you know, not trade barriers, I'm saying. So it's a very, very potent market. So, you know, I think it's something that, you know, global investors or companies can, you know, afford to ignore.
I love it. So, gentlemen, we have 2 minutes left for our session. And can I suggest that we wrap up with a one-word description from each of you,
Mm-hmm.
how you describe the future of your exchange. So maybe I'll start off with Mike.
Purposeful.
Purposeful. Cool. Datuk Umar?
Accessible.
Accessible. Wonderful. Ramon?
Right.
Wonderful. Dr. Pakorn?
May I add all of these 3 words into one sentence? Capital market for all.
Oh, wonderful, wonderful. So we've come to the end of our session. Thank you, Datuk Umar, Dr. Pakorn, Ramon, and Michael for keeping it very, very real today. So in finding the new opportunities in ASEAN, here are my 3 key takeaways from the session. Firstly, there is light at the end of the tunnel with a buoyant market outlook anticipated for ASEAN. Secondly, the exchanges of ASEAN have substantive plans in place to sustain the domestic momentum, with both ESG and technology leading the charge. And thirdly, it was universally agreed that structural shifts will happen with technology, but regulatory frameworks need to be there to bolster any transitions to ensure investor integrity, which is what we all care about. With that, we come to a close of our panel. We hope we have served the intended purpose of sharing inspirations on the next opportunities in ASEAN. Thank you all for tuning in. Over to you, Azhar.
You're welcome.
Bye-bye.
Thank you, Amy. Thank you, Amy.
Bye-bye.
And thank you to all the distinguished speakers.